Hi, you're listening to Mind Your Business with Carla Dennis, and I am Carla Dennis. All the years that I've been in business, I have to tell you, I've seen so many business owners lose their business, make critical mistakes in their business because of lack of knowledge. I want to provide you with great tools and content so that you don't make these same critical mistakes in your business. We're going to go right into MYBUniversity. Our topic today is amended tax returns. And this is actually a great time to even be looking and considering amending your tax returns. So let's talk about it. What is an amended tax return? An amended tax return is a correction to a tax return that has been previously filed. It could be a correction to a tax return because maybe there was an issue that you start to recognize in your tax return that you're like, oh my gosh, that was incorrect. I need to correct it. Or it could be a result of you realize you didn't include all of your expenses on your tax return. But an amended tax return gives you an opportunity to file a corrected return with both IRS and the state revenue authority. And it's an opportunity to just get everything really correct, and it's a redo, if you will. One of the things, though, that we want to be conscientious of with amended tax returns is that we don't want to continue to amend tax returns. I've seen tax returns be amended, then I've seen an amendment to the amendment, and so on and so forth. So when we go in for that amended tax return, we want to just go in for 100% of everything that we need to do on that amended return and kind of be done in one shot. Now, you may be thinking, who can file an amended tax return? An amended tax return can be filed by an individual, a corporation, a limited liability company. Any tax return can be amended. And that's one of the beauties of the tax law. Anytime that you see something that's not quite right, you can go in and amend those tax returns. Now, one of the things that you want to make sure of is that when you do amend the tax return, like for federal purposes, you want to amend the tax return for state purposes as well. And that's really important because the states have now piggybacked off of federal law. I believe there's like 5 states that haven't completely piggybacked off of federal law, but the majority of them have. So if you are amending your federal return, you want to make sure that you're also amending your state income tax return because these taxing agencies, they do speak to one another. And if there's an adjustment on your federal return where you owe tax, they're certainly going to notify the state, and the state is going to come after you. In the event that there's an audit, for example, and you have a federal tax audit and there was an adjustment to tax that was an increase or even a decrease, you have 6 months in which to go and amend your state tax return to make that adjustment as well. Now, if you're in a position where there's a tax due on the federal and you know there's going to be a tax due on the state, and you don't make that amended return within that 6-month period, you are going to get hit with penalties and interest. So I do want you to know that there's a window of opportunity there, a 6-month window that allows you to amend a state return if there's an adjustment needed so that you don't get hit with penalties and interest. And that's really important because we want to keep the majority of our money in our pocket. So in terms of reasons why you amend a tax return, again, as a result of an audit, you will amend a tax return. You can amend a tax return because maybe all of a sudden you found out you didn't report all of your income. And if you didn't report all your income, you certainly want to be the person to amend the return. You don't want IRS to come knocking on your door. Let me give you an example of what I'm talking about. A lot of people a couple of years back really got on this train of using the PayPal accounts and doing different things with eBay and all of these online merchant services. And a lot of them thought that IRS was never going to reconcile merchant services online with what was actually happening on a day-to-day basis. But that stopped. IRS started going back and looking at these merchants' accounts. They even came out with a brand new form called a 1099-K. A 1099-K where the merchant services all of the different ones that you use, the little swiper you use on your phone, the PayPals, all of these different merchants now have to report your income to IRS by the month. They picked up on a situation with a client who didn't pick up on that income. I don't even think it was her not trying to report it. It's just that she didn't get any documentation from the merchant herself. But once IRS started going back looking, she had an unreported income issue. So we had to get that tax return amended very quickly and report all of that income. And that's extremely important because if you fail to report your income by more than 25%, that is considered fraud. Doesn't mean that IRS will pursue fraud charges against you, but it is considered fraud and they can't. So we want to avoid that at all costs. Another reason to amend your tax return, and I get this quite a bit, when clients come to me and I'm looking at their tax return from prior years, I'm analyzing that tax return. I want to make sure I understand what has happened on the return. Maybe I find a situation where I could redo that tax return based on a tax law that I know about that is going to help the client. So then I will talk to the client about that, talk about the refund amount, and then we will amend the tax return for that reason. There can also be reasons that you will want to amend a tax return that is not going to impact you from a bottom line perspective. It's not going to give you a refund. It's not going to give you an increase in tax. But maybe you're amending for a proper address. Maybe you are amending because something on the tax return was not quite right. Maybe you didn't have the car listed properly on the tax return. So that's where we're doing a correction that is going to help you moving forward in the event that something happens. And so we're talking about amended tax returns, and we're talking about the reasons why you would consider amending a tax return. You can get an IRS letter that may say to you on the IRS letter that maybe you forgot to report an IRA distribution, or you had a home sale, and because you thought that home sale was tax-free because you didn't reach the exclusion on the gain amount, you thought you didn't have to report it. Well, IRS is not going to know if you sell your home that it was tax-free if you don't report it and show it was tax-free. So there's a lot of reasons why you can amend a tax return. And just remember, it's okay to do that. You want to make sure you have proper documentation, proper validation through IRS code as to why you're amending the tax return, and then go ahead and get your tax return amended. It's perfectly okay. Now, you may be thinking to yourself, wait, if I amend my tax return, I get a refund. Is that going to increase my chances of an audit? I can tell you that I cannot necessarily say it will increase your chances of an audit. We do amended tax returns all the time, and our clients' returns are not necessarily flagged because there's an amended tax return. However, here's a couple of things I want you to really be cautious and conscientious about. When you are amending a tax return, you want to make sure you send in proper documentation at the time you're amending the return to support that amendment. We don't want to just amend a tax return, send IRS a letter saying, oh, I now have an additional $3,000 in office expenses, and I want you just to take this as a deduction and give me more of a refund. Absolutely not. We want to make sure we document, and send that documentation into IRS appropriately. I think that alleviates returns from being amended when you put the proper documentation or notation to the return. I think that's very important. Also, something else I want you to think about, and this has become very, very common because of the big crash we had in the housing market. A lot of people have started filing their tax returns and only stating income on their tax returns. And then they're going back and they're amending their tax returns and taking all of their expenses. Well, guess what? IRS has caught up to that. So you don't want to do that. If you're going to file a tax return that states your income, and you do have to state all of your income when you file a return, you do not want to go back and amend that tax return. Because remember, when you file for that application with your lender, that was the tax return that you gave them. If you turn around and amend it just to add expenses to it, you could get yourself in a fraudulent situation. So we want to be very, very careful in doing things like that. It has to be a legitimate reason why you are amending your tax return. Very important, because now with all of this lending crisis, this has become a chronic problem. We're getting a lot of letters, clients that are coming to us because they've gotten letters from the IRS. And when I ask them, did you amend this return because you bought a house? The answer is typically yes. So now we're in a kind of a catch-22, because technically you defied your mortgage company by not doing it properly, and IRS is now reporting back to these mortgage companies. So we want to be very careful there. Another great question that you want to know the answer to is, how many years can you go back and amend a tax return? You have up to 3 years to claim a refund. Up to 3 years to claim a refund. And that's really important, because if you think there's a refund out there, please put in a claim for refund. Even if you don't have all the proper documentation at the moment, you have to establish the claim, because if you don't establish the claim and you get ready to go back and try to amend, you may amend, but they're not going to give you your money back. IRS is going to hold your refund, and it's just going to go bye-bye. So we want to make sure that we establish a claim for refund. And I want to give you an example where this is like a very crucial situation. I have a client that has come to me right now. They were in an audit. I'm representing them in the audit, and this is dealing with some losses on their real estate. The position of the IRS is wanting to disallow those losses, and this is going all the way back to tax year 2011. In the event that they disallow those losses, some of that property has now been sold. So I have to make sure that I establish a claim for refund for my client right now, even though I don't have all documentation, so that I can get those losses to flow when the property was sold. It's a little complicated, but there are times when you do need to do that. So it's very important that you at least have an awareness as to what that's going to look like. And finally, I don't want you to worry about red flags at the IRS. A lot of people think, again, I'm going to get audited. IRS is going to flag my tax return. They're going to put a note by my name. They're going to remember me. Don't worry about any of that. What I want you to focus on is always doing the right thing, always following the law, always using the code to the fullest extent. And if it warrants amending your tax return, then that's what you're going to do. Because remember, my philosophy is I believe we should pay our fair share of tax, but I don't believe that we should be overtaxed, and I don't want you leaving Uncle Sam a tip. If you have any questions and want to talk to myself or my guests, please reach us at 800-721-7374. That's 800-721-7374, or reach us at MYBUniversity.com. That's MYBUniversity.com.